Hey guys, this is John. I have a special interview, a re-interview, so to speak, today with Patrick Gergen. You may remember Patrick from last year. He talked to us about some properties he had out in Kansas City. Well, Patrick is back with us, and I got some great questions for him. But first, I want to start with saying thanks for joining us again.
Absolutely, John. Good to see you again.
Good to see you too, Patrick. I know that you had the property. Let's start there with the properties in Kansas City. How are things going there, and where are you at with that?
You know, it's actually going very good. So the Kansas City market, I've always liked that. And it's always good for passive income. But basically what we're going to do is we're shifting towards multifamily. So the Kansas City's market's great. We've got properties there. But really we've taken the next step and we've elevated and focused more on the multifamily projects now.
All right. Now
so
you had talked with us at the end of that video about multifamily.
Yes.
And I understand you have some good stuff going right now. So let's segue into that. Tell us a little bit about where are you at with multifamily and why are you there?
Okay, so what we've done, you know, again, a lot of it is just really doubling down on what's going extremely well. It's a great economy to invest in projects. And so our first project, which is the one that I was talking with you about, was Timber Park Apartments. It was 158 units in Dallas, Texas, built in 1968. And we were able to buy this project for $1.77. So again, that's under $12,000 a door. It's just gone fantastic. It was distressed. 73% occupied, and currently now I'm proud to say it's 94% occupied.
Wow.
And we're getting ready to do the refinance, so it'll be really good for ourselves and our investors.
And where's this located at, Patrick?
And this is located in Dallas, Texas.
All right, now you've told me about this, but this is interesting for our audience. Why Dallas, Texas? Why did you focus on that?
Okay, so the reason I like Dallas, Texas, this kind of goes back to, you know, I was Ron LeGrand's commercial project manager. And so I was doing that for years, and when you're pre-screening deals and going around the country, just seminar after seminar, and people are bringing deals to you and you're pre-screening them, you really zero in on where the good projects are. And over again, I realized that Dallas, Texas is, all things considered, the best market in the United States. And what I tell people is I say, if you've got an interest in Dallas, Texas, just Google it. Go to Google and type in Dallas Texaplex. That's Texaplex. Watch that 7-minute video. And all things considered, when you look at, like, say, for instance, risk to reward and price of entry and where you can really get the good quality deals, Dallas, Texas has so much more to offer than every other city.
All right. Now, I got to ask, why is that? What's fundamental about Dallas, Texas that it causes such a great deal for multifamily right now?
Okay, so the reason why that's so good is because Dallas, Texas is very pro landlord. And so by that I'm saying that if you've got different people, let's say for instance that you've got a bad tenant. You know, where we're at in the Seattle, Washington area, if you've got a bad tenant and if they give you rent, if they're within a lease, you have to take that rent. In Dallas, if they're a bad apple, as I refer to them as, you can basically just say, look, I know you've got a lease, I'm not going to accept your rent, and we want you to move out. And so there's a lot to be said for being able to have people remove that. Maybe they're paying their rent, but they're just not very nice people. And so that's really nice. The second thing that's really nice is Dallas, Texas has a lot of the jobs that are being created in the United States. Most of those jobs are being created in Dallas, Texas. Fundamentally, it's an extremely strong city. You've got a lot of the energy sector. Of course, we're moving into the wind sector. A lot of the clean energy, that whole sector is continuing to rise. And then you can just get really good price points. So there's a lot of really good selection to be able to buy properties at a great price, get them stabilized, and then get them refinanced.
Got it. All right. So Patrick, I'm wondering, I know you have a criteria used to select properties. Tell us a little bit about the property you're looking for and the business plan around that. I know you have a very specific model here in choosing your properties.
Okay, sure. Yeah, absolutely. We have very specific parameters that we look at. So for instance, when anybody will send us a property, unless it has negative cash flow, we're not going to focus on that property. So we buy properties that are in distress because we want to have the value adds that we can increase. We will only buy B-class properties in C areas in the Dallas area, and we buy properties that can be stabilized. So they need to have value adds. I need to have one value add that's going to be that the property needs to be remodeled. The second value add will be that it has a low occupancy, and I can increase that. The third is going to be that the property will only qualify for like an all-cash purchase, because when I buy that property, I want a severe discount.
Got it. Okay, you have a B-class property in a C-class area. What do you do to stabilize the property and increase the rents to market rents?
Okay, so immediately what we do is we change out the management. As soon as we change out the management, we'll get rid of the bad apples. We do that because we've got a security team actually that has nighttime security, and so we'll have the bad apples move out of the property. Once we've got the bad apples out of the property, and there's always going to be some, again, because these properties are like bank owned, so they're not really minding the stores, what I say. They're not paying attention to the tenants and who live there. Once we get rid of the bad apples, then we begin bringing in the better tenants. And we do that through a huge marketing effort, through flyers and referrals and tenant retention programs. We immediately put in a police substation, so then they know that they've got comfort and security. And then after the police substation, we will create a really nice model unit. We've got the playgrounds and the play sets that we'll put into place. We just put one in at Millennium Point. We've got a church group that will come in, and the church group that we've got, they'll run an after-school daycare program. We also have an after-school snack program, and then we have like big parties. We get the bouncers out, and I've got just beautiful photos of all the kids really bouncing. So we let the people know that we're building a community. We're all about customer and tenant retention. We're going to have the bad apples go. We're going to attract the really good people, and we're definitely going to take care of them. That's just a small example. There are many, many things that we do to really make it a community. But again, when we've got the assigned units for the church group as well, it really makes a positive difference with the people and the children that live in our projects.
So that's awesome. I love
Yeah.
that. So at some point, I'm sure you need to refinance these properties. Now, I know the refinance critic from the loan perspective, but speak to that.
Yes.
How do you prepare the properties for the refinance, and how long does that take? And tell us a little bit about that.
Oh, good. Okay, I like talking about this because the refinance is one of the key points to our business plan. When you invest in multifamily projects in the Dallas, Texas area, the golden rule for Fannie Mae, and again, Fannie Mae is a harder loan to get, but again, we go with some strict criteria. So the golden rule for Fannie Mae is that you've got 90% occupancy for 90 days. Now there's more to that. So for instance, you can't just rent the places out for $100 a unit and say, okay, I've met the occupancy. So certainly you need to have the net operating income high, and your debt coverage ratio needs to be proportionate. But all things considered, you want to make sure that your economic occupancy will refer to bad debt and concessions and things like that, is higher than 80%. Once you get that, and you can show that the property has been trending upwards, and you've got a couple months history of that, you can get yourself a Fannie Mae refinance, which is what it's all about.
Great, absolutely. All right, tell me, Patrick, what kind of investor are you looking for that might invest in these properties with you down in Dallas?
Okay, so the investors that we look for, again, they're accredited investors, and so there are qualifications to become one. And you can look up the definition for accredited investor. The other thing that we do is when we're looking for the investors, we let them know that we buy properties that need to be stabilized. We buy at extreme discounts, and we buy properties that are in distress. So they're not going to have cash flow until we restabilize them. So the investors that we have, they come in, they understand that distributions are quarterly. They also understand that it's going to take about 12 to 18 months to get the property stabilized. And then the best part about it is that we're going to do a refinance. Once we do the refinance, we'll be able to, get the investors, this is always projections, will be to get our investors 85% or more of their money back. They retain ownership, and then they can continue to receive the cash flow distributions quarterly. So that's really, really cool.
That's very cool.
Yeah.
Now, what kind of projected yield do you think the investors can anticipate if they were investing in one of these projects?
Okay, so the yields are fantastic. And again, I like to have people talk with me about it because sometimes when you see numbers, people just don't believe them because they're certainly higher than the average. So the cash on cash after the property's been stabilized and before the refinance is typically in the double digits. So let's just say, to keep it simple, that it's about 10%. But again, if you invest, let's say for instance somebody will invest $100,000, and let's say with $100,000 they're receiving $10,000 in income per year. That would be 10% cash on cash. Well, the beauty of what we do is that after the refinance, we give them back 85% or more of their capital. Well, if you take that cash on cash, which is your $10,000, and now you divide it into $15,000, which is what you have remaining in the deal, as you can see, the cash on cash returns, the return on investment is certainly phenomenal.
Absolutely.
Yeah, very good.
I like it. Okay, so back to this refinance. Now, I know what we're
Yes.
looking for, so what
Yeah.
kind of pre-work, if any, do you anticipate you need to do these projects to prepare them for the refinance, Patrick? Is there anything there?
Oh yeah, okay, so that's another really huge point. I'm glad you asked. You know, before we even buy the property, we have our mortgage broker look at the property and give her full blessing.
So, I want to revisit this again about the refinance, because I know there's some criteria that our investors have for the refinance itself.
Yes.
What kinds of things do you know you need to do upfront to the property to prepare for that?
Okay, John, yeah, I'm glad you asked that question. That's extremely important. So as far as the refinance and to make sure it's going to qualify, when we're looking at projects, before we place anything under contract, we're going to have a mortgage broker take a peek at that project and make sure that it's going to be able to refinance. Because if there's anything that's vague at all, we don't want to have any part to do with it. You know, again, the reason that we like to get these properties restabilized is because then we can do the refinance and, of course, get our cash flow back. And so it's extremely important. Now, the other thing that's important to say, beyond just making sure that it's going to qualify, we've got to make sure that we do the remodels correctly. We've got to make sure that we get the right tenants in there, of course, tenants that are going to pay, and they're going to show some really nice financial statements. And we want to make sure that it's in an area that can be refinanced. In other words, we buy in C-class areas. Right now, the banks just love the C-class areas because when we refinance our projects, we're refinancing them for under $19,000 a door. So they just love the numbers. And the other thing that I like to point out is that like on some of these projects that we're buying these for under $20 a square foot. Well, when you can buy a property for less than it would cost you just to buy the material, you can only imagine that the banks really like that.
Absolutely.
Yeah.
Patrick, I know you talked a little bit about the investor yield and the fact that they're going to get 85% or more of their cash back.
Yes.
On the refinance. How do they get paid the balance, and how does all that work? How do they get paid here?
Oh, I see. Okay. So basically what happens when our investors come into the project, you know, they actually have ownership shares of the project, and they're going to retain that ownership after the refinance. So the way they get paid is because we have cash flow distributions that are quarterly. Everybody is paid on a pro rata basis. So once the property's been stabilized, cash flow distributions are quarterly. And then, of course, after it's been refinanced, they're going to get most of their capital back. Their ownership, of course, will remain, and they will then continue to get cash flow distributions quarterly. So it's just a really good thing.
It sounds like a very interesting thing.
Yeah.
All right, so last question here for you. How are people going to contact you, Patrick, if they're interested in properties in Dallas, Texas, and getting more information on a specific project?
Okay. Well, the best way to reach me, I guess, number one, I would say definitely take a peek at our website. And our website is www.multifamilyalliance.com. Again, my name is Patrick Gergen, and you can reach me via email. So my email is Patrick, G as in George, that would be the @ multifamilyalliance.com. And, you know, really, John, because everybody's just local here, I would say you can even just reach out to me, send me a text, or call me on my cell phone. And my number is 206-910-2291. And, you know, that's just about the best way to reach me. For the people that are local and the people that are dealing with you. I don't hand my cell phone out to really everybody, but I realize this is a lot of the people that you're working with.
Fair enough. And speaking of the people we're working with, you talked to me earlier about some special thing you might offer the Pacific One Mortgage audience if they come through Pacific One Mortgage and talk to you and get involved in one of these projects. And what was that, please?
Okay. Yeah, I know. I always have to make sure that I've got a really good benefit, and that's what I love about working with John. He makes sure that that happens. So what I will do, for those of you that have an interest in our projects, if you guys buy your plane ticket, I will pay, and I don't do this, you know, so this is something that's very unique
Good.
for the people that you're working with. So full disclosure, this isn't something that just really happens. I will go ahead and pay for their stay. So if they want to come out and take a peek at our projects, I'd love to show them around. Not only I'd like to show you around Dallas, of course I'd like to show off and show you our projects as well, but I will pay for your hotel stay and meals as well while you're there.
For up to 2 nights, is that correct?
Yeah, for up to 2 nights.
All right,
exactly.
great. You don't get quite a week vacation there, guys, but 2 nights to visit Dallas and see Patrick and the projects is pretty good.
Yes, yeah, absolutely.
Hey, thank you for that. I appreciate your time. Great to see you again, Patrick.
Yeah, absolutely.
Thanks for that. So, guys, on the blog, there will be a coupon associated with this, but you can just mention Pacific One Mortgage when you talk to Patrick. Some very interesting projects. I've looked at the numbers with him and seen some of the pictures of the stuff down in Dallas. Get a hold of Patrick, see what you can find that you might like there. There sounds like some good yields and a very unique investment opportunity. Thanks.
Bye, everybody.